excited to have Don Thornton back. He's your tax savings best friend. Originally from St. Louis. Where are you living right now, Don?
I'm in Orlando.
Oh, you're in Orlando. Are you
Yeah.
permanently in Orlando?
Yeah, I've been
Great.
here for
Just down the
24
road.
years.
Okay, good to have you back. I know we had you back talk to us, and we've actually got a lot of your clips that we use for our
Oh, good.
TikTok. So
Good.
that's been quite fun. But today we're going to talk about something that has been known. If everyone can mute themselves, that would be great. Thank you. So we're talking about something that has been around and accountants know about it, but we haven't really had to deal with it. So it's called the Corporate Transparency Act. And there are lots of people starting to panic because it's going to become effective January the 1st, 2024. And we're speaking this the day before Thanksgiving 2023. So we're going to have Don, first of all, explain your background, a little bit about who you are and what you do. And I would like to delve in a little bit about your tax saving strategies. But the purpose of this, however you want to go with it, is what you're doing to educate people about this important fact that's coming up for small businesses, large businesses, etc. So Don, we'll take it over.
Well, thank you for having me. I love, I loved being here last time, and it was great to speak to everybody. You guys got a great group, and I really admire what you guys are doing, especially on the multifamily side, which is something I never delved into. So I have the utmost admiration for anyone that would do that. I was just always too much like, I don't want to be a landlord. Maybe that's to my detriment, but that was my mental block. But like you said, thank you very much for the introduction. I am a peer, but in a different way. I've been doing short sales predominantly for 21 years. My company is called HB Funding Inc. Very proud of the fact that over 3,500 flips that we've done in 21 years. Not one time we ever had a complaint. We have a spotless A+ rating with the Better Business Bureau because we take care of our homeowners and we do a good job. And I came upon this. I have a trust. I'm in full disclosure. I have a contract law personal trust that has helped me save a tremendous amount of money on my taxes. But I'm not talking about taxes today. I want to focus just on the Corporate Transparency Act. The reason why I started getting into this in more detail, like the last 4 or 5 months, is because I was notified about it, and thank God, I was also informed that because I run everything through my trust, is that my trust is exempt from the Corporate Transparency Act. And so, because real estate investing is, that's been almost a quarter of my life, I've dedicated to this, almost half of it actually. I am passionate about letting you guys know about what you can do to protect yourself. And with all due respect to any attorneys we may have here, any CPAs, I don't think they are sufficiently telling people about the landmines that are in this act and all the collateral damage that can definitely occur and will occur if people don't take action to exempt themselves in their real estate investing business from this act. Okay, so in addition, I wear 2 hats. My first hat, of course, is the real estate investing, but I also have another hat. There's a law firm out of Houston that's been doing these types of trusts since the 1950s. And I've been working with them as a promoter of their trust for, I don't know, almost 2 years now. And recently, late last summer, they gave me a promotion. There's only 3 what they call master distributors in the country, and they made me one of them because I've apparently done a good job. So I work directly with them, and so as the law firm. And we talked about this at great length, and we have basically said we're going to focus on Corporate Transparency Act because it's so vital that people understand what's coming. So, but before I get started, the obligatory disclaimer: I'm not a licensed tax, legal, or accounting advisor. This is for informational purposes only. This is not to be considered tax, legal, or accounting advice. Please, see a licensed professional before you enter into any financial transaction. So now that I got the specter of the lawyers coming after me, I can talk freely here about what we're gonna go over here. So the Corporate Transparency Act, it's going to change everything for real estate investing. I'm just going to I'm going to say a caveat here. If you have an LLC or if you use LLCs in your business, they're not going to be worth the paper they're written on anymore for what you want them to do for you. Okay. Especially those of you who may have been putting them in states like Wyoming, Delaware, Nevada, for the express purpose of shielding yourself from being known who the ownership is, tax purposes. Maybe you think there's some tax advantage there. Certainly anonymity, right? That's all gone. As of next year, it's going to be gone because it's all going to be put in this fishbowl of a database that the federal government is creating with the Corporate Transparency Act. They're worthless. Just I'm not gonna tell you that right now. If that's what it's just what you have them for. They're done. And when you I'm gonna go through the highlights of this with the low lives, and you're gonna see why you don't want to be involved with this law at all. It starts on January 1st, 2024. Although if you have an existing entity, you have until the end of next year to register for the act. So you've got some time. Okay. I've been more proactive because I already had my trust, my personal trust, but I got a contract law business trust because I do have streams of income that are active business income. I do consulting, I sell courses, and I do some affiliate marketing. So those are active income, and they come right into I need to get a business trust for that. I was running them through my S corp before, but now I got to make that change. So I've already spoken with my CPA, and he agrees with me. He says, yeah, we're gonna shut this thing down, and we're gonna file our 2023 return, and then we're gonna shut the S corp down. So that's the action I'm taking. Just so that's how seriously I'm taking this. It is the first time in our country's history that there is a federal database that's being created, and where a large segment of the population is going to have to put everything, all their beneficial ownership information, into this database. It's run by the Financial Crimes Enforcement Network, FinCEN, which, oh, by the way, their main purpose is to go after money laundering. Okay. And keep that in mind as we talk about this, because that is the whole motivation for this, is they are going after money laundering, drug trafficking, human trafficking, and terrorist funding. And they believe that this is all being done in LLCs, shell companies, holding companies, and smaller companies. That's where they feel like that is. And so, in my opinion, the goals of the law are fine. I have no problem with that. I mean, I'm not on team terrorist, okay? But what I am against is the bull in the china shop approach that this law is taking, and the enforcement of which is taking, and it's going to cause a lot of damage to people, and people are going to get hit. And they have, even though they may think they're 100% clean and so on and so forth, there's still going to be a lot of things that are going to be happening that's going to cause some major difficulties. And in my opinion, it's better to remove yourself completely from that fishbowl of a database and stay away from the spotlight. Okay, even if you're doing everything 100% right. Okay, just that's where I'm coming from for this. So I have that's my personal bias is out there at the very beginning. So in there. The whole thing is about what they consider a beneficial owner. So I have an S corp. I have 100% of the stock. So I'm sole owner, president, and so on and so forth. But according to this law, I'm not only the owner. There are other beneficial owners of my company that the government's going to consider my owner. So if I have, let's say, think this way: if you have a structure where you have any kind of senior management, VP, CFO, COO, anybody like that, the government considers them beneficial owners of your company, and they have to report to this. If let's say, for example, if you use an agency to register a new LLC, so you got to do a property and you want to make a new LLC like you do normally, okay, the person that files the registration is considered a beneficial owner of your company. The person who supervises that person is a beneficial owner of your company. If you own 25% or more of any other entity, you are a beneficial owner of that company, and you have to report everything. And I'm going to do what you have to report in a second. if somebody exercises significant control of your business, that's a murky, subjective term. They are considered a beneficial owner of your company. If someone has exercises significant influence on your company, that is considered a beneficial owner and has to report. Okay? Do you see just right there a lot of bureaucratic hoops they're going to have to jump through this entire thing? That alone is not good. Okay? But there's something sinister about this. This is where the landmines are coming in. Let's just focus just right there on that. You have to report everybody that's inside that's considered a beneficial owner of your company. And each one, like if you have multiple companies, you got to do the whole thing for every single one. Imagine how much time that's going to take. But so you file the report, and you have to report for every single beneficial owner. Your name, your personal residential address, okay, date of birth, social, all this stuff. And I mean, the normal stuff, identification of your passport or your driver's license, your number, and your picture. A picture of you waist up to them. Okay, and that has to be done for every single person that's considered a beneficial owner. So if you use someone who's who helps you register your business, you got to track them down and get them to do all that stuff for you. And if you don't, you are not in compliance with the law. This law has civil and criminal consequences. If you don't comply, or if you make an error and they consider that to be willful noncompliance, they can stick you for a $500 a day retroactive fine. Okay? You can see how that can add up pretty quickly. If they consider it willful noncompliance, they can charge you criminally. It's 2 years in prison per violation. Okay, so this law's got some teeth to it. It's not just some stupid federal thing that you got to do some extra reporting on. So understand that. I'm not even talking about the criminal side of it from the point of view, if you commit something that's a criminal offense, you deserve to go down, right? I'm not talking about that. I'm saying we're all good people. We try to follow law and so on and so forth. The collateral damage is where the danger is. Okay, so let me just give you a quick example. Let's say that on January 31st of next year, you send all of your paperwork in. You managed to get everybody there. You managed to get them to give everything that you're supposed to get. Oh, and that's just the applicant information, your business information, everything, your registrations, your your residence, your EIN numbers, the whole thing, DBAs, everything's got to be included in that. Okay, so there's a whole bunch of stuff's got to go in there. So let's say on January 31st, you send that in to the government. Now, there is specific language in the law that states that they will give you a 90-day safe harbor to correct mistakes. But it's very vague. And if you read it, you can see that it's very unclear if that safe harbor applies only to those who self-report a mistake, or if they have to tell you made a mistake. It's unclear about whether that will be safe harbor or not. So think about this. There are 36 million LLCs in the United States. 36 million. And they're all going to have to report by the end of next year. Can you imagine the backlog this is going to be? So let's say, and I think this is probably a best case scenario. Let's say you send your report in, and then on May 31st, they come back to you and say, hey, you messed this up right here. All right. Now, is that safe harbor? The attorneys that I work with say that's very, very dicey about whether that's safe harbor or not. And it's up to them. Remember, this is FinCEN it's the money laundering people. They go after money launderers, right? So they're already pretty, hardcore. They could easily say that you are non-compliant, and they can stick you with a $500 a day fine retroactively. So that would be 90 days at $45,000 as a fine. It very, very easily could happen. What if it goes longer? Okay, That's a lot of money that you've got there. That's out there that you're going to have to pay. All right. Here's here's the
When you
thing.
say retroactive,
From the date
when?
that you sent your stuff in. So it'd be January 31st would be the date on your application. In this scenario. Okay.
Gotcha.
Yeah.
Okay.
All right. So here's another landmine for us. Every time something changes in the with the beneficial owners, that has to be updated with the federal government. If it's not, you are non-compliant with the law. Let's circle back to that applicant or his or her supervisor. And let's just say this, for the sake of this example, that she's a young woman and she gets married. Doesn't tell you she got married. Doesn't tell you she changed her name to her husband's name, or doesn't tell you she put a hyphen to it. You don't submit that within 30 days, you are not in compliance with the law. Period. If any of your beneficial owners move and they don't tell you they've moved and they don't give you an updated photo of their driver's license with that new address, you are not in compliance with this law. Okay? How fun is that going to be to keep track of all that stuff? Okay? And again, this law has teeth. They could easily.
So let me read. So everybody, me and Samantha, everybody, Dennis, all of us with LLCs, in January 1st, we're going to have to do all of these things, including if we had a lawyer register our business, they're considered a beneficial owner. Even though they're not technically owner.
Yeah, you have until the end of next year to register. So it's not like you have to do it like on January 1st. But for existing companies, you have until the end of next year. Now, for your existing company, you're not going to have to worry about the registration part of it, because that's kind of like, that's grandfathered in. But if you form any new companies as of January 1st, then that person is going to be considered a beneficial owner, whoever does a registration for any new things you put together. Okay, any new LLCs, any new S corps or whatever. I'm saying, no, Dennis. What I'm saying is that it is retroactive from the point that you, if you send your registration documents in on January 31st, and they come back to you 3 months later and say, "Hey, you missed this. This is a mistake or whatever." They can, the date of your registration, your application was January 31st. They can come back and retroactively fine you for every day that you were not in compliance. Right? That's the danger.
After January 31st.
Yes, exactly. That's where you would get the retroactive fines involved. So you don't have to worry about the applicant of the registration persons for LLCs that already exist before 2024. But moving forward, that's going to be an issue if you like I said, get a new property, you work like you normally work, get an LLC to put that in there, then that person is going to be your considered a beneficial owner. So, but yeah. So anyway, that is the danger. That's one of the dangers, one of the landmines that's out there. Okay, so you constantly have to update the database of whatever changes are made to the status of one of your beneficial owners. So, and if you don't, like I said, it's up to them. They're the judge and jury. You're innocent until proven guilty as far as FinCEN goes, because that's what money laundering is. That's how they're in charge of enforcing that. This is all the money laundering statutes apply to this law. So it's a whole different ball game as far as what potentially could happen, and without you really doing anything wrong per se. Just innocent mistakes can lead to some pretty interesting and dire consequences, worst case scenario. The second thing is that by being in this database, then they spent billions and billions of dollars upgrading their digital and AI capabilities. So everything that you've had, if you've had you had a good portfolio and you've got it widely diversified and you've got different LLCs in different states and so on and so forth, you've probably done a pretty good job of, you know, reducing your taxes and, you know, obviously your anonymity. But now that's all in one thing. They're going to know everything, and they're going to send AI analyzing stuff, and they're going to say, well, we think you underpaid your taxes on this year. Judging by what we have here and here and here, now they can see everything, and they're going to be much more able and much more motivated to go after you for previous years where they think that you underpaid your taxes. Okay.
So presumably this is opening up to litigators the whole concept. Shall we spend $10,000 to find out who this person is?
Yep.
Do we even need to bother? Do they have any assets? Now, presumably, it's going to be easier for litigators to
they say that it's only, this information will only be available to law enforcement, federal agencies, financial institutions, and law enforcement. But it's also available by court order. Right. That's what I'm saying, is that your anonymity is out the window. If you think you've got anonymity, it's not there anymore. It will not be there anymore. Period.
So that means, you know, that sounds bad, and it is bad, but that also means we can find out who owns any property
through a court order,
right?
Through a court order. I mean, it's not going to be easy.
Through a court order, okay.
Yeah.
I got you.
Right. Okay. So that's another danger that we're talking about. So again,
can I ask you one more thing about it?
Mm-hmm.
If somebody's looking to sue us, then wouldn't our Wyoming LLC still provide some protection and as far as
they can get a court order? They can get a
lawsuit. They'll get a court order to say
they could go in and access all that information through this database.
Lawyers with money, they need to decide. Well, not lawyers with money, but they the whatever the person is needs to decide, is this person worth going after?
Mm-hmm.
And with money talks. They can access it however they can through a court order. I mean, if it costs money, they can get it, right?
Yeah. All right. So next thing. So again, one more reason you're in this fishbowl, and I'm very glad that I'm out of that. Okay. So next thing that we have issues with are the banks. Okay. The banks are now the eyes and ears of FinCEN for this law. I had a conversation about a month or so ago with a guy that's pretty high up in Citibank. And I was just chit-chatting with him saying, hey, you know, do you know about the Corporate Transparency Act? And he said, yeah, of course. We had federal agents here, you know, the last couple of weeks that were training our staff on what to do and so on and so forth. I said, really? He says, oh yeah. I said, so let me ask you this. Are they what are they doing? Looking for suspicious activities? Oh yeah. He said they are charged with looking for suspicious, you know, unusual, you know, transactions to flag. Before, they would file a suspicious activity report, send it off to the feds, and then just whatever, right? But now they have the right, and they are being encouraged to freeze accounts immediately. Freeze accounts first and ask questions later. Send it to SAR, you know, send the SAR report over, and then the federal the investigations will start. Most of the time, those SAR reports have been filed for 10 years or whatever the law's been around. Not much has happened with that. There's a whole different idea about that now. They are moving towards starting immediate investigations, and they'll freeze an account right away. And here's the interesting thing. I also learned this from the attorneys when we did our training. You know, statistically speaking, only 1% of people that get caught up in this ever get their money back. And if they freeze your accounts, how are you going to defend yourself? You know, It's really scary. I asked this guy, I said, so how many do you think, once this gets started, once this CTA gets started, he says, how many accounts you think that you guys are going to be freezing? He says, oh, thousands a month. This is easy, thousands a month. They're really going on. And so from a real estate point of view, for me as a flipper, I'm thinking to myself, okay, so if I average $15,000 to $25,000 every time I flip, but what if I get a big score? Yay! I made $75,000 in a flip. Is that an unusual thing? Because AI is looking at this, right? And they're being trained to look for this stuff. So that's going to be suspicious. Oh, that's way above. They're going to be more apt to.
But then they'll see you made $75,000 on the flip. Then they'll be like, okay, he just did a good job, and we'll leave him alone, right?
You're asking for banks who know nothing about about our business. They're making the judgments about whether this is a business, economic, or lawful transaction, and whether it's something out of the ordinary. Okay, they're the eyes and ears. They're being trained for this. Okay, and that's Jay. I hope that's the way it works. I do.
Once you make, you're saying the scary part is once you make your 75,000 weird transaction dollars and that goes into your account, they can freeze your money right then and there because it's suspicious. That's the problem.
Yes.
And then ask questions later.
Yes, exactly. And they will find once an investigation is started, they'll find any justification to not give that money back. That's why, from a statistical point of view, only 1% is ever returned. So that's another, again.
But why would they take it though? I don't understand. When they freeze your $75,000, I don't see.
They would freeze the entire account. They would freeze the entire account, not just the $75,000.
But then I don't see unless they found something bad.
They file a suspicious activity report with the feds. The feds will start investigating, and they will find something in what you're doing to justify not giving that money back. I mean, if you Google right now how many bank accounts are being freed, they're already freezing more and more and closing more and more accounts. Just Google it. It's already started. Okay? It's just not getting a lot of press, but it's out there. All right? So the banks are going to be very, very and I listen, when I was changing or opening my new accounts up from my business trust, I was chit-chatting with the manager because I've had the same account since 2015. I know them very well, my local branch. And so I was just chatting this lady up, and I was just saying, okay, so I said, so let me ask you this. This account is, it's not with the Corporate Transparency Act. I said, do you know about that? Yeah, it's flagged. It's exempt. I said, does that mean that you guys don't pay attention to those? She goes, no, we're focused. We've been trained to focus on the ones that are not exempt from the law. So if you remove, so I said, so basically then I'm removing myself and my business out from that spotlight, which means, chances most likely they're not paying attention to my stuff over here with an exempt company. They're going to be focused on the ones that aren't exempt. She goes, yep, pretty much. Which I thought was very, very interesting. So that's another huge landmine that's out there that can be collateral damage for CTA. And I mean, it's just like I said, it's a lot of stuff there that's going to end up causing a lot of grief to a lot of people. For those who voluntarily stay or register with it and think they're okay and we don't do anything wrong, so no big deal. That's what I'm talking about, is that, in my opinion, it's better to be safe than sorry and run your real estate investing business or other business, through an exempt company, exempt structure, which is what I've done and which is I'm here to talk to you guys about. So, do we have any questions about CTA specific before I get into how to protect yourself from it?
Any businesses that we have up until now, we have until the end of next year to get our records up to date.
To register.
Moving forward, if we start any new businesses, that's where we're going to have to be very transparent about who's DBA.
Well, no, you'll have to be as transparent with the existing company. It's just that you don't have, but you have until the end of next year to register.
So we've got to chase everyone that we
Mhm.
know that might be a beneficiary
Beneficial
and
owner.
look their records. We
Yeah.
have a year to do that for all the LLCs
Yes.
that we have.
Mhm.
Yes, course.
Yes.
Yeah. Okay.
Yes. Yeah. All right. So then, so
I have a question.
please.
How does this tie into having a land trust and or a spendthrift irrevocable trust?
A land trust is a land
Are
trust.
these solutions?
Yes, I will tell you about that in just a second. But the land trusts are not exempt. Okay, they're not
Land
exempt.
trusts are not exempt.
Nope, they're not exempt.
Everyone get that? Land trusts are not exempt.
Yeah. All right. So, the rules is there's about 24 exempted companies. They're the same jokers that got off in the great financial, the Great Recession and got bailed out. Banks, insurance companies, all that stuff. So they're exempt. If you gross more than $5 million a year and you have 20 or more employees, full-time employees, U.S. based in a brick and mortar building, let's say, not remote, then you are exempt. Anything less than that, then you have to, if you have a corporation. Well, here, I'll just show you here. I'll share my screen. We'll go into this here. I'm going to share my screen. This is from the federal government's own document. Did everybody see this? Okay. It's about so it's all about what law was the company created or formed. So if it's a U.S. law, is this a corporation? Yes, then it's a domestic reporting company and you have to report. Is it an LLC? Yes, you have to report. No ifs, ands, or buts about it. You have to. For my purposes, here's the key phrase. Was the company created by the filing of a document with a Secretary of State or similar office under the law of a state or Indian tribe? If it was, yes, you have to. If it wasn't, then you don't have to report. And that's the key thing here. This is the loophole. Okay? Any entity that owes its existence to any act of a legislature is a reporting company and has to report. Land trusts as well. They were all created by some sort of a legislative act. So therefore they have to report. Okay? Now, our trusts, our contract law trusts were not created by any legislative act. They are a contract law trust. It's a contract is still guaranteed by the Constitution, Article 1, Section 10. No state shall pass any law that impairs the ability of the obligation of contracts. So as long as the contract is not illegal, then we still have the right to a private contract. So by all intents, by all means, I mean we're not like I said, we're not created by an act of a legislature. Therefore, we are exempt. So our trusts are not required to register with, like, for example, here in Florida, sunbiz.org, right, with the Division of Corporations. My company, HB Fundings, go on Sunbiz, do a name search, boom, it's all there. But my trusts are not there because they are not required to register with any state. Therefore, they are also not required to register with the Corporate Transparency Act. So my advice would be, and again, this is what I'm doing. You can do what you want, but what I'm doing is I've already done it. So all of my property, my assets, I have sold into my trust. So if you have one property, you have 100 properties. Get a trust, get it into the trust. You're the trustee. All right. And then they have that spendthrift provision. It's basically unbreakable, not subject to any court turnover orders. It's the best asset protection you're going to get in the United States. And the anonymity is there as well because they're not registered anywhere. They can't penetrate it unless you do fraudulent conveyance, which you're not going to. We'll make sure you don't do that. And then you're protected. And one of the benefits is that you don't have to do a tax return for every single LLC you have out there, right? Because it's just one tax return, one EIN number. But most importantly is you're removing yourself and your bank accounts from the fishbowl away from there. Now you're back in the haven of anonymity and so on and so forth. So that's really, really important, and that's what I'm doing.
What's the categorization when the bank looks at your accounts and says this is exempt? What's the term? Because I hear you saying trust, but what's the
we're
highlighted?
an irrevocable trust.
It's the irrevocable trust that will
Yes.
say, the bank will say, okay, these guys are
Right.
exempt. You
Right.
need to really look into them. Irrevocable.
But it's not just because again, there are irrevocable trusts out there that are also created by an act of a legislature. So those are not exempt. I mean,
Okay.
they're still going to have to, but we, when we give them our trust certifications, we inform them that it is a contract law irrevocable trust.
So it's the word contract law. Can you expand on that? What do you mean exactly when you say contract law irrevocable trust?
Okay, so a contract, so we still have the right to contract in this country. Like I said previously, it's a right of the Constitution, Article 1, Section 10. No state shall pass a law impairing the obligation of contracts. Now, it doesn't mean that you can form a contract and do something illegal. It has to be a legal contract, but it is not. So I can contract with my neighbor to sell him my bicycle, at whatever price I want, and as long as there's a buyer and a seller, there's a service or goods or provided, as long as there's monetary consideration, and as long as there's mutual acceptance, that are the four components of a contract. So the trust is a contract. Okay, so therefore, it is not required to register with any state of the union, and by that status, we are also thankfully free from having to, we're exempt from having to register with the Corporate Transparency Act. Okay.
How does a normal
That's
contract
huge.
compare from what you're saying? I don't see. Is it the language?
He's saying all contracts are exempt from any state regulated anything. Every state has to honor all the contracts. So that's in the Constitution.
Yeah,
so
I don't want.
The trust is a contract.
Yes,
it's a type
exactly.
Of contract.
Yes.
But everybody has contracts. What's the difference? I can't.
Well,
see
this the trust language is designed to let us perform the task the trust wants to do. In our case, it is to protect our assets. It is to, whatever the governing instrument is, the trust. And so as long as the governing instrument and language inside is not, advocating something illegal, then you can run whatever you want through a trust. But there's different kinds of trust. That's why you always have to put the caveat on this, is that it is a contract law trust. 99% of the trust in the country are statutory law trusts. That means that they were created by some act of a legislature. Okay, so therefore they're not exempt. They have to move forward. So that's the difference.
So it's the language that's used.
Yes.
Whether it was created by the legislation or not.
Well, no. If it's created by a land trust was created by a legislature. So that's already cut and dried. That's right. Not. Yeah.
But look, you could compare two contracts. One's been written with your language, and one's been written with other language, and that really basically is the difference. It's the language you're using within this contract. It's
the fact that the trust agreement and the governing instrument was not created through a legislature. It was done by, in this case, it was done by the attorneys that I work with out of Houston. Okay.
Gotcha.
So, then I don't want to get too deep in the weeds here, but there was a Supreme Court case back in the early 1900s it's called Elliott versus Freeman, and it was about a tariff, a federal tariff, and about who was under who was had to comply with the tariff. And the Supreme Court said that trusts were exempt because they were in the realm of equity and not from an act of a legislature. So that was the case law that supports this. Is that as long as it's not illegal, that we can run any kind of business through a contract law business trust. We can run our real estate investing business with our contract law personal trust. That's the loophole where we're able to move. Now I'm not going to sugarcoat this. I'm not going to, it's going to be a pain in the ass to do this, but you have to, but to be free from this, if you want to be out of the spotlight, then what you're going to need to do is you're going to have to, obviously form the trust. You're going to be the trustee of the trust, and then sell your assets, because it's an irrevocable trust. So you have to sell them into the trust with a deed and a bill of sale. And then but there's a little bit of a nice bonus here that you get for doing this. And it was just a great surprise for me. The way you do this is when you're preparing to move one of your properties into the trust, you use a cost basis formula to determine the price of the sale. Whatever you originally acquired the asset at, what that price was, add whatever improvements you made to that property over the years of your ownership. Then subtract any depreciation you've taken in previous tax years. Whatever that final number is, that's the cost basis price of your asset. That will be on the bill of sale. The bill of and the deed, of course. Then that by doing those two documents, now your trust owns the property. But like we talked about with contracts, there has to be some kind of monetary consideration given for it to be a valid contract. So the trust will give you a promissory note, a promise to pay back that cost basis amount that you have there. But here's where it's fun. You can withdraw money from the trust against that promissory note, and it's not a taxable event for you. It's considered a return of capital.
Because it's still a loan.
Yeah, it's a return of capital. So yeah, so basically, the money that you have coming into the trust, you can withdraw that tax free, as long against that promissory note. So think about this from a flipping point of view, which is what I am, right? I know most of you guys are buying holds, but it's still the same thing. So every time I acquire a new property, I'm gonna follow the same procedure, and that I'm building basically, a treasure trove of tax-free money that I can withdraw from if I need cash. That, the trust pays for a lot of expenses on its own, a lot of expenses, but whatever it doesn't, and if I want, if I've got most of my income coming into my trust and I want to go on a trip to Tahiti with my wife, that's not a trust expense, then all I have to do is just, the trust will pay for it or cut me the check for that from a return of capital against that promissory note. It's not a taxable event. So that's kind of a bonus.
Which is what you discussed last time.
Yeah.
Too. That was always the benefit of a
one of the benefits, yes. So it's kind of cool that you can that you get this is kind of like a 5-alarm fire where you're trying to save the women and kids, and you're trying to save your properties and not have to be involved in all this crap that's coming down from the CTA, and that's the extra bonus, right? You get the asset protection, you get the access to the tax-free money from the return of capital, and you're not in that spotlight, and you're not looking over your shoulder as you conduct your business like you would normally. And that's I
have a hard stop at 11. I personally have a hard stop at 11. I would like for you to talk about your service, because you offer the Spendthrift Trust creation. I think, but still, right? You still do that?
Yeah, exactly.
So based on what you said today, you are more important than ever before, obviously.
Yeah.
So, like I said, we're going to put this on YouTube and share it. Mm-hmm. But if you could talk a little bit about how to acquire services, a little bit about the process, how much it's going to be, and just kind of lay that out on the line for us.
Sure. It depends on what you want to do. What I would say is you have to look at everything as a whole. I have active income streams, like I said, where, you know, courses I sell, consulting I do, affiliate marketing, that's all active income. That does not come into my personal trust because only passive income comes into my personal trust. So I need to have a business, a contract law business trust for me for that money to go into. Now, my personal trust, in my case, is the beneficiary of my business trust. So the contract law business trust operates exactly as a single member LLC or an S corp. So I mean, if it needs to hire employees, it does. If it needs to withholding, pays whatever you want to do as a normal business, it does exactly the same thing. There's no difference at all. The difference is that once all the expenses have been paid at the end of the tax year, if there's money left over that would be, net income that would be taxable, it's going to K1 down to you personally, or in my case, it goes down to my personal trust. Okay, so the business trust is a pass-through entity from a tax point of view. All right. Now on the so if you have besides real estate, if you have income streams that produce active business income, you probably want to look at getting a business trust as well. If you're just looking and so if you're a W-2 employee, you're exempt. If you're a sole proprietor, you're exempt from this law. So if it's just about your real estate, then you can do everything you need to in just your personal, contract law personal trust. Okay, so you had to decide what works for you. And listen, I'd be glad to do a free 30-minute or an hour, session with you and go over exactly what your situation is and see exactly how you need to work. So